Tax compliance in a multi-jurisdictional business landscape in an increasingly interconnected global economy. Tax compliance has evolved from a routine administrative task to a strategic business imperative. Accountants and financial professionals must navigate a labyrinth of federal, state, and international regulations that govern corporate taxation. The complexity is amplified by the rise of e-commerce, remote work models, and multinational operations that create overlapping jurisdictions. These factors require meticulous attention to detail and up-to-date knowledge of evolving tax codes across various regions. Understanding the core components of tax compliance encompasses all legal obligations related to collecting, reporting, and remitting taxes on behalf of clients or organizations. This includes income taxes, sales taxes, payroll taxes, and other regulatory requirements imposed by governmental authorities. A critical aspect involves maintaining accurate records and ensuring timely filings. Delays or inaccuracies can result in penalties ranging from minor fines to severe legal consequences depending on jurisdiction severity. Professionals must also understand the distinction between voluntary compliance and mandatory requirements set forth by regulatory bodies. Staying informed through continuous education helps maintain adherence to these standards. Data accuracy. Maintaining precise financial records ensures correct tax calculations and minimizes errors during audits. Timely filings. Meeting deadlines prevents late fees and potential criminal charges associated with willful noncompliance. Navigating federal tax regulations. Federal tax laws form the foundation upon which all other levels of regulation build. Understanding Internal Revenue Service (IRS) guidelines is essential for both individual taxpayers and businesses operating within the United States. Recent updates include changes to standard deduction amounts, modified tax brackets, and new provisions under the Inflation Reduction Act. These modifications affect how income is categorized and taxed at different rates. Accountants need to be vigilant about Form W-2 and 1099 requirements as well as proper classification of independent contractors versus employees for payroll purposes. Failure to correctly classify workers may lead to significant back pay liabilities along with additional employment-related taxes owed to the government. State-level tax compliance complexities. Differences among states often create challenges when managing multi-state operations. Sales tax nexus rules have been redefined following court decisions such as South Dakota versus Wayfair Incorporated, impacting where companies are required to collect and report taxes. Each state maintains its own set of regulations regarding withholding taxes, franchise taxes, and unemployment insurance contributions. Keeping track of these variations requires ongoing research and implementation of robust tracking systems. Some states impose additional levies like gross receipts taxes or privilege taxes beyond traditional income-based assessments. These can significantly impact net profitability if not properly accounted for. Technology solutions such as automated compliance platforms help streamline data collection while reducing human error in complex environments involving numerous jurisdictions. International tax considerations. Globally active enterprises face even greater layers of complexity due to differing international treaties, transfer pricing rules, and foreign exchange considerations affecting cross-border transactions. Double taxation agreements aim to prevent individuals and corporations from paying taxes twice on the same income earned abroad. However, interpreting and applying these treaties accurately remains challenging without specialized expertise. Cross-border digital services introduce another layer of complexity given recent developments concerning digital service taxes proposed by several countries targeting tech giants' revenue streams. Complying with OECD's base erosion and profit shifting (BEPS) initiatives adds further depth to international tax strategies requiring careful documentation and transparent reporting practices. Evolving trends in digital taxation. The emergence of digital economies necessitates adaptation towards new forms of taxation, including value-added taxes applied specifically to online transactions. E-commerce businesses now frequently encounter issues surrounding VAT registration thresholds and reverse charge mechanisms applicable to B2B purchases made outside their home country. Blockchain technology introduces novel approaches to tax reporting but also presents challenges related to anonymity features, potentially complicating audit trails necessary for compliance verification processes. As cryptocurrency adoption grows, so does scrutiny over capital gains realization timing and appropriate valuation methodologies used for transaction recording purposes. Leveraging technology for enhanced compliance efficiency. Modern software tools equipped with AI capabilities assist accountants in detecting anomalies within vast datasets before they escalate into serious issues during audits. Cloud-based accounting systems enable real-time collaboration between teams located in different geographic locations working simultaneously on shared projects or client files. Robotic process automation reduces manual entry tasks involved in preparing monthly reports, thereby freeing up time spent on higher-value analytical functions. Implementing cybersecurity measures becomes crucial when handling sensitive financial information stored digitally against threats posed by cybercriminal activities seeking unauthorized access. Maintaining ethical standards through professional development. Ongoing professional development keeps practitioners current with legislative changes that continuously reshape the landscape of modern accounting practice. Participation in webinars focused on emerging topics provides opportunities to engage directly with industry experts discussing practical applications relevant to today's dynamic environment. Continuing education credits obtained via certifications programs ensure credibility among peers while reinforcing foundational principles guiding ethical decision-making scenarios encountered regularly within profession. Prioritizing transparency when advising clients builds long-term trust relationships based upon mutual understanding rather than mere contractual obligations alone. Strategies for mitigating risk exposure. Risk management frameworks provide structured approaches helping identify vulnerabilities within existing internal control structures designed primarily around minimizing exposure areas susceptible to exploitation. Conducting regular internal audits allows early detection of discrepancies prior becoming full-blown problems demanding external intervention, resulting costly remediation efforts later stages. Engagement with third-party auditors offers fresh perspectives, identifying blind spots overlooked internally despite best intentions maintained consistently throughout operation lifecycle phases. Documenting every step taken throughout entire compliance journey serves dual purpose: acting evidence defense strategy should disputes arise, plus facilitating smoother transition periods whenever organizational leadership shifts occur naturally over time. Conclusion: tax compliance demands constant vigilance against shifting landscapes defined by technological advancements reshaping traditional paradigms established decades ago. Previously dominated physical presence limitations restricting scope. Operations confined local boundaries alone. By embracing innovative technologies alongside rigorous adherence, procedural protocols grounded solid foundations, ethics, professionalism ensures sustainable growth trajectories aligned broader economic objectives pursued collectively worldwide. Community engaged, inclusive progress forward.